And welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is the president of Asset Preservation Tax and Retirement Services. How are you, Stewart?
Oh, doing unbelievably well. The phone is ringing off the hook here with all the craziness going on.
Oh, I know, it has been crazy. There's so much going on. Today's topic of our show actually is probably going to make the phones ring as well. We're going to talk about estate planning and living trusts, inflation and diversification. But before we get into that, Stewart, what's going on in the market right now?
Well, what I'll tell you, Cynthia, is that the world has changed. We're in a much different place than we were, a month or two ago. And, obviously with everything that's happened in Russia or with Russia and the Ukraine, I almost feel, I had a friend in our industry that says, sometimes you have to shake your Etch-a-Sketch and start all over again. And it feels like that's what happened to the rules that we've been following, all these years. But we're seeing incredible amounts of volatility. We're seeing, the markets all over the place. It's a really tough thing,
Absolutely.
Mohammed El-Arian just came out. He's an amazing guy that worked for PIMCO for years. Now he's with Allianz, their parent company, a phenomenal company. And he's talking about the big fears of stagflation. We're seeing massive changes in the market here with record high inflation. People were talking about 6-7%. That number looks to be more like 8 or 9%.
Wow.
Which is going to create some problems.
Oh yeah.
Used cars up 40%. From this time last year. So
40%.
Yeah. So I loaned this this car to a buddy of mine, to his kid, and just to get it out of my driveway, and now it's worth double what it was a year ago. It's the craziest thing ever. So that all comes at a cost. It's going to cost people a lot of money.
It definitely will, Stewart. What about interest rates? Where are they at right now, and how is that impacting things, if you will?
Yeah, so interest rates are at all-time lows. Stock markets at all-time highs, minus about 10 or so percent. What the issue with interest rates is that they've been signaled to be raised 4 times here over the next year, but now with all of this stagflation, I mean the Fed is a lot of their tools may not have much effect moving forward because now that the market's starting to turn. Right. The question is, are we at the end of this amazing bull market? And, we're now in technical correction territory. The world's different than it was, like I said, a month ago. So with interest rates, they're still low. And people are worried about inflation. So if you put money in a checking account, you're not keeping up with the effects of inflation.
Yeah.
So people now are coming off the table saying, hey, I've got all this money in the checking account. Where should I put it? Well, is the stock market the right place for those people? Maybe, maybe not.
Yeah.
Depends on your time frame.
What about our supply chain right now, Stewart? What's going on with that?
Unbelievable. It is horrendous right now. Once again, we're so dependent on China as a supplier of stuff. I talked about this time I was out fishing off the coast of California, and there are ships. You may not be able to see them anymore off the coast of LA, but man, they are parked way out to sea here, and they're just, we can't get enough stuff in. It's just massive inefficiency in the supply chain right now, and God bless all these workers. They're trying their hardest, but when we need to talk about infrastructure, I think we need to learn how to move product.
Sure, that makes sense. It sounds like everything you're describing is kind of a perfect storm, Stewart. Like there's going to be some changes on the horizon. How do we make sure clients are protected at this time?
Well, I think it's really important, Cynthia, that people have a plan.
Yeah.
And when we talk about planning, I think it's really important to, have a financial plan. It's important to have, an estate plan and a tax plan as well.
Absolutely. You mentioned estate plan. I would love to spend some time talking about that because that's a very important piece of the equation. How many people have an estate plan at this time? Would you say very few or some?
Well, it depends. I think the real question is how many people have a real good estate plan? And I think oftentimes what I would say is that people are incomplete with their planning. They're not. A lot of people realize that they got a will because they heard they needed a will, now, people are saying, hey, should I have a trust or should I not have a trust? Is it the right thing? Well, living trusts are a really hot topic right now. And, we started as a company. We're in our 25th year now in business at Asset Preservation. And our company was founded basically on the principle to provide estate planning to people at a fair price. And, you don't have to be named Rockefeller to have a living trust, because what a living trust does is two things. Number one, it helps you avoid probate. And what probate is having to go through the court process of deciding who gets your assets. So it's about avoiding probate and estate taxes. Well, right now, the estate tax threshold's at $11 million per person. So not everybody falls, into that category anymore. But at one time, when I first got into the industry, the estate tax threshold was at $600,000.
Wow.
And so, what a trust did in AB Trust is it allowed people to double their exemption to get more money exempt from that, 47% plus tax. Mm-hmm. It's really, really high, right?
Yeah.
And so, a trust is a really important thing. But, I think sometimes people are just lost when it comes to a trust. They don't know where to go or what to do when it comes to that.
Absolutely, Stewart. And you say beware of trust mills, if you will, trust mills. What exactly is a trust mill?
Yeah, so if you see people, doing seminars for living trusts that aren't attorneys, and they're selling them for $600, $699, generally there's a catch, right? So, I'm originally from California, raised in San Diego, mm-hmm. and back in the 90s and early 2000s, living trust mills were a real problem. And what living trust mills are basically companies that advertise living trusts at seminars and so forth. They do them, at their own cost, but they're really trying to basically gain information that you have for financial information to sell you products, very expensive, loaded, expensive insurance products. Mm. And, California came down really hard on those kind of companies. So there's a couple of them that kind of snuck into Arizona and started doing business here. So a lot of the operators from California are operating a couple of the bigger ones here in Arizona. But generally, if somebody's coming to your house to try to sell you a living trust, I would just be wary. There's some great ones out there, but whether they sponsor your country club or whether they do a lot of advertisement, that doesn't necessarily mean they have your best intentions at heart. So I think it's really important to avoid those places that are gathering your information in what we call a pretext interview, where they basically, when you're filling out your information, where are your assets, where's your house, they're basically saying, oh, well, he's got $500,000 in a mutual fund. Let's go sell him this more expensive product to make a big upfront commission.
Wow.
So I'd say, that's a concern.
Absolutely.
And I would just say that, be careful with them. They're popping up like crazy here in Arizona. It's a huge concern because generally they're not fiduciaries. They're just insurance salesmen. Be careful.
Well, Stewart, I know they have a very special offer to present to the viewers at home today. Let's talk about what that is and then open the phones.
Absolutely. So what we're offering today is a complimentary portfolio review. And in that complimentary portfolio review, what we can also take a look at is, and remember, we have estate planning attorneys that we've worked with for 15 years. We do living trusts at Asset Preservation, but we only do estate planning for our financial clients. So, we're not doing estate planning for, people that are looking for a cheap trust. So that's not what we do. But our complimentary portfolio review, we don't mind taking a look at your trust, seeing if it's up to date, seeing if it's, if it does its job, we're going to let you know. If there's some issues, you may have your 28-year-old children that are now being, supposed to go to your neighbors next door because you set up your trust, 20 years ago, right? It's, things change. But if you give us a call at 833-652-7829, or if you click on that QR code that's right there in the corner, what we'll do is we can take a look at what kind of fees are you paying, what kind of risks are you taking. With all this craziness going on in the market right now, people are scared. And all you have to do is take action. Give us a call or click on that QR code. Super easy. Fill out a form. We'd be glad to meet with you and give you our second opinion.
Stewart, thank you so very much. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We're going to take a very short commercial break, but don't go anywhere. When we come back, I'm going to talk to Stewart about diversification. Are you diversified? You're going to want to know the answer. Stay tuned.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is president of Asset Preservation Tax and Retirement Services. Stewart, I would love to spend some time in this segment talking to you about such an important topic, diversification. How does someone know if they're diversified?
Yeah, well, I think, a lot of people have a huge misconception over, how diversified they really are.
Yeah.
And the first thing when people talk about diversification, generally what they're talking about is a diversification of investments. And so there's multiple types of diversification. Let's start with the investments. So diversification of investments is essentially saying that we want to make sure that if you have an asset, for example, that's in the S&P 500, you also have something that's counterbalancing that. So if, for example, some sort of stimulus occurs in the market, let's say it drops, right? You don't want it all to drop together. You want this asset to go up and this asset to go down. You want to create some counterbalance so if the market crashes, it doesn't all crash together. So I think diversification of investments is really, really important.
Okay.
But I also have been talking lately about a diversification of perspectives. I had some great clients come in the other day and they said, listen, we've been with our guy for 15 years. He's a really nice guy. He's really, really smart. And we talk about different mutual funds that we should buy together and so forth. And he's picking out the funds with me together. So I like being part of that. And what I tell them is that scares me to death.
Yeah.
And the reason is because your entire life's work is dependent on how that one person sees the market. What if they're wrong, right? What if they're wrong? Like in November of 2020, we use institutional money managers, and we have multiple managers. We have the largest money manager in the world. We have an algorithm money manager. We have a manager that was working for the biggest or one of the top bond houses in the world, who's now our chief investment officer. But we have multiple perspectives being reflective in these portfolios. And so we flash back to November of 2020. And, one of them basically said, hey, during all these uprisings and, all of the different Antifa and all that stuff that was happening back then, a lot of people were concerned, because like if you watch one news channel, you think, oh my gosh, the world's going to crash. If Joe Biden got elected, the market's
true.
going to crash, high taxes, high regulation. The other half said, no, it'll do really well because he'll do well for the people. And, there's all these conflicting views.
Absolutely.
And so people have two different points of view depending on what news channel you watch, right?
That's true.
If you watch cable news, you're torn. You're in two different realities. So if that affects you and I, we see the world differently. Don't you think that affects these financial advisors and money managers?
Sure.
And what if they get it wrong, right? So one of our managers, basically going into November of 2020, was concerned that higher taxes, higher regulation would create a crash in the market, so they went defensive. The other one stayed on the gas, and what happened? Who was right? Well, the guy who stayed on the gas was right. But what if he wasn't? What if he was wrong and the market crashed and you had all of your money based on that one point of view?
Wow.
That's why it's really important to not have everything concentrated in one position. So a diversification of investments is really important, but a diversification of perspectives, to me, is even more important. If you're sitting across the desk from the guy that's picking your funds for you, that is just scary to me.
Yeah.
We want to depend on some of these really big name money managers that oversee, trillions of dollars in one of the cases. And, we're not allowed to use their name on TV here. It's one of our prohibitions, but we can discuss it in person. But diversification of perspective, super important.
Okay.
Also a diversification of strategies. So one of them may be passive. One of them may have an algorithm. One may be tactical. I have a slide here that I want to kind of explain the difference between passive investing and tactical investing. So the first slide is a slide of passive investing. And what this is going to do is show you a pie chart of classical static asset allocation. So when you're a young investor, you tend to be more aggressive. You have more equities, less bonds. As you start aging, it progresses through the progression there. So as a late investor, obviously you have less equities because you want less risk in the market. Well, what happens in this situation is that people tend to gravitate to the mean because what they do is they end up picking a position that fits them at that period of time. And what this does also is it creates laziness, Cynthia. They create these models so that you hold these 60-40s or 70-30, asset allocation percentages so that they don't have to make any changes, right? Well, the next thing I want to show you is a tactical approach. And so what we're showing you on the screen now is going to be a tactical approach. Now, this here basically is one of our money managers has identified 6 distinct stages in the economic cycle. And during those 6 stages, there are different investments that do well. There are different actions that should be taken. But this takes a lot of work to identify where we are.
Sure.
And so this algorithm is basically, they claim that they can identify precisely where we stand. And so just think about it, Cynthia. If we're going into a decline in the economic cycle, if we're seeing recession, there are different investments that should do well, right?
Sure.
If we're in expansion, you should be full throttle. Well, let's take a look at what happened during the Russia invading Ukraine. I got my phone, and by the way, all my financial clients have my personal cell phone number, so, I want them to use it because, the biggest issue with financial advisors and clients is they don't have anyone to talk to when they're really concerned. And, sometimes it's hard to make hundreds of outbound calls in one day. But,
sure.
They're calling me up, hey, Stewart, I'm watching the news. I'm concerned. We need to sell and go to cash. I said, look at your portfolio. Go on to TD Ameritrade or Charles Schwab or Fidelity, whichever platform they're on with us. And I say, look at your portfolio. What's it down? 0.2%, for example.
Yep.
Right? They're down 0.2. The market's down 2% today. And they're like, well, the news is saying we're down. Yeah, it's because our algorithm manager has shifted into a defensive position already. And listen, they don't always get it right. January, they didn't call it very well. No one's going to get it right all the time. So you need to be diversified in that. And then also, before I wrap up, diversification of tax strategies.
Okay.
So really important to make sure that you don't have all your eggs in one basket when it comes to tax strategies. You need to consider Roth. You need to make sure that it's not all pre-tax or not all post-tax.
Well, Stewart, I know there's a very special offer you want to present to the viewers at home today. Let's talk about what that is again before we reopen the phone lines.
Absolutely. So if you give us a call at 833-652-7829 or click on this QR code here in the corner of the screen, What we're offering today is to take a look at your portfolio, give you an honest second opinion about what kind of risks you're taking. Are you truly diversified? And I don't just mean diversification of investments. We'll look at all 4 diversification strategies that we're talking about. We'll look at taxes, we'll look at your investments, we'll look at your strategy, we'll look at whether you're passive or whether you're tactical. We'll give you an honest second opinion, but you have to take action and give us a call at 833-652-7829, or even easier, you click on that QR code right there in the corner. It'll take you to our website, apsitaxes.com. You can fill out a form and tell us a little bit about yourself. We'd be glad to contact you.
Stewart, thank you so much. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We're going to take a very short commercial break, but when I come back with Stewart, we're going to talk about taxes. So please stay tuned.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He is the president of Asset Preservation Tax and Retirement Services. Stewart, a great show we're having today. Obviously, we're in our new studio. We weren't talking about that when we first opened,
Right.
But it's exciting, and we're getting used to the feel of it, so I love it. What about you?
I'm having a great time. I think it's great. A lot of funky colors going on here. Hope I look good here. No, I have the thinning light on here to kind of get rid of some of that. But
Well, in this last segment, I would love to talk to you, Stewart, a little bit about taxes, because
Right.
that is something else that people are very concerned about. So your clients, are they coming in, Stewart, asking you specifically for tax information at this time?
yeah, I think quite honestly, I think that's what really differentiates us from the other advisors in town. Is that I think our message is contagious. I think that we're starting to see another advisor on TV talk about taxes, but at the end of the day, it's really important to have a tax office, right? To have a full staff. We have 2 CPAs, 2 enrolled agents, couple certified tax preparers, and the purpose of that isn't just tax preparation, right? Tax preparation, you can go to the local tax person to punch in a few numbers, get your taxes done. What tax planning is, and that's the most important part, is actually planning for the future, right? Because during tax season, which we're in the middle of now, it's crazy time. It tends to extend beyond regular times, but tax preparation season is just. I mean, we're swamped, and we've taken a position as a company that we don't do taxes for clients that are not, financial clients of ours. We just got too bombarded with, tax issues. But you need to make sure that your advisor can talk about tax. It's a super important part. And, there's that old saying, it's not about what you make, it's about what you keep. And at the end of the day, Cynthia, you need to make sure that you're being tax efficient as well. And there's a lot of different mechanisms to do that.
Okay, absolutely. Stewart, obviously, I want to talk a little bit about we're in the most efficient tax window in history. What does that mean exactly?
Yeah, I say that all the time here. And what that means to me is that we have to remember that, listen, whether you love Trump or hate Trump, I don't care. You have to understand that we are in the most efficient, lowest tax environment in history right now. It's super important that over the next couple of years, that you make some, decisions, do some planning. And, a lot of people will realize that taxes are low. Some people don't want to really kind of admit it, depending on what political,
Right.
party they're affiliated with, right? I tend to be somewhat neutral in that regard. I'm a Berkeley educated, centrist, and so I'm kind of rare in that case.
Okay.
The unicorn of Berkeley, I guess, but I think it's really important to have a plan.
Absolutely.
And we're super active. So tax preparation is one thing.
Right.
Tax planning is a whole different thing. And you've asked me before, well, why don't you just do tax planning when you're seeing your tax preparer every year during tax season? You know why? Because they're working 10, 15-hour days. They are exhausted. They are zombies. If you're doing your tax planning during tax season, that's a major, major problem. Because understand, I've got, 5, 6 people on my tax staff year round, and what they're doing is they are just trying to get your tax return done. And they'll say, hey, to save you a few $1,000s, if you put $7,000 into your IRA this year, you can save $2,000, on taxes. Does that sound good? Let's do it, right? People want to save money. The problem is they're building this massive tax time bomb. And this tax time bomb it needs to be diffused, because what deferring your taxes does, it saves you money today. But does it make any sense to be saving taxes today? For example, I have a client that's in the 12% tax bracket. He's an amazing teacher and basketball coach here in Phoenix at a phenomenal place. And he's paying 12% tax. And he's putting money into a 403B, right? It's the same as like a TSA or a 401k. He's deferring his taxes because he's got 3 kids that are dependent on him. He's got a wife. And he doesn't make a ton of money, working in education.
Yeah.
But he's putting away this money tax deferred at 12%. When he retires, because of his pensions and his kids are going to move out, all his deductions are gone. He's going to be retiring at a 22% bracket from our cash flow modeling. So he's deferring taxes to when he's going to pay double.
Wow.
Right? So I think it's really important to have a plan, to really think through whether or not tax deferral makes sense for you. I had a client come in the other day came in from an amazing advisor at a great company, did really well with managing the assets, but he has this big, tax time bomb. He has this $1 million in an IRA and now realizes, oh my gosh, I have to pay the taxes on that now.
Wow.
Right? And it's now going to make Social Security taxable. So, the average couple has between $900,000 and $1.5 million of Social Security combined if they live to normal mortality. So why make that taxable?
That makes perfect sense, Stewart. I can't believe we're to the end of another amazing show this week. Thank you so very much. To the viewers at home, most specifically, we'd like to thank you for spending time with us today. That number is 833-652-7829. Any questions that you might have about taxes or about estate planning, Stewart has the answers for you. He is offering you a complimentary consultation. Don't miss the opportunity to come in today. Again, 833-652-7829. Be safe, be happy, be blessed, and we look forward to seeing you back here again 1 week from today on the Asset Preservation Hour. Take care.